Have you noticed the market downturn today? Both Nifty and Sensex have dropped by nearly 1%. So what's the reason behind this? Number one is the recent escalation between Israel and Iran, which has intensified tensions in the Middle East. Iran launched an attack involving drones and missiles targeting Israel in response to an Israeli strike on the Iranian embassy in Damascus. Both sides have strong statements in response to the incident, with Israel vowing to retaliate and Iran warning further assaults if provoked. The decisions made by Israel's leadership in response to the attack will determine the next steps in this ongoing conflict. Now let's understand the impact of this on the financial markets. The recent escalation between both the countries poses a threat to the global economy, as the Middle East is the major oil-producing region. This conflict has the potential to push energy prices even higher, making it harder to control inflation and disrupt international trade. Oil prices have already been on the rise in recent months due to a tight global market and production cuts by OPEC. The ongoing conflict in the Middle East has further intensified this trend, with Brent crude prices jumping 6% in the past 1 month. This surge is likely to continue if the conflict persists. The situation in the Middle East not only threatens to raise oil prices, but also disrupts crucial shipping routes. Iran's control over the Strait of Hormuz, a crucial route for global oil transportation, raises concerns about a possible blockade. Additionally, rising tensions have already impacted the Red Sea route, leading to increased freight costs. These disruptions will further strain supply chains and contribute to inflationary pressures. RBI and Federal Reserves were already struggling to control inflation. The current geopolitical situation complicates their plans. High energy prices and ongoing fluctuations in freight costs make it hard for them to lower interest rates as planned. This could lead to higher interest rates for a longer period. Now, what are the other reasons for the market turmoil? While the escalating conflict between Israel and Iran in the Middle East serves as the primary driver of this decline, additional factors are also at play. We're witnessing a continuous rise in the US dollar. The dollar index nears 106 and its exchange rate against the Japanese yen has reached a 34-year high. This trend in the dollar fuels a corresponding increase in the US Treasury yields, ultimately triggering a wave of selling across global equity markets, including our own Indian market. The combination of geopolitical unease and the rising US dollar is prompting foreign institutional investors, or the FIIs, to withdraw funds from the Indian stock market. Essentially, the current market decline is influenced by various factors, with the Middle East conflict playing a significant role. So as an investor, how should you react to a situation like this? It's crucial to approach this situation with a long-term perspective. Historically, financial markets tend to weather most crises, whether it's geopolitical tensions, terrorist attacks, or regional conflicts. For long-term investors, it's essential to stay focused on your investment goals. While staying informed about current events is important, don't let the daily headlines dictate your investment decisions. Having said that, this is Aditi Priya signing off.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com